All right, folks, in this episode, we got a little real estate update for you. We're going to be talking about this situation. Is this a real estate investor trap or opportunity? We have big changes to ADU and allowing ADU rental income to qualify you for another property. And then we also have changes to the down payment requirements for small multifamily housing, 1 to 4 units. And so big changes underway, but we also have a data point that shows that foreclosure filings are up to levels that we haven't seen in a few years. So we're going to break this situation down. This is going to be a real quick update. Let's get right on into it. I appreciate you guys for tuning in. So first off, big news for ADUs today. FHA policy now allows ADU rental income to qualify for mortgages, further cementing ADU's role in the housing market. Many more changes rolled out, making it easier to buy a home with an ADU or build an ADU. ADUs are a great way to add some much-needed entry-level housing. There's an estimated 1.4 million ADUs in the USA already, and the pace of construction has been going up over the last 5 years. Now, we get the highlights of the policy changes right here. Borrowers can now use estimated ADU rental income to qualify for mortgages capped at 30% of qualifying income. ADUs can be folded into new construction financing under FHA now, and it's immediate. FHA-approved lenders may begin offering borrowers mortgages on properties with ADUs under the new policies effective immediately. And apparently this guy runs a company, CoverBuild, and they sell ADUs. He says, when we, CoverBuild, started selling ADUs in 2016, California state laws had just been announced. ADUs were super niche. This FHA announcement marks a big milestone for ADU acceptance and their increasingly important role in nationwide housing. Now, what's funny enough is we actually had one of our Discord members, huge shout out to Travis, who actually shared his example, his story of how he did a couple ADUs on his property in California and how that's been an incredible investment for him. And now, Travis, you should know that, that rental income can now help you qualify for another property, which I know you're making your real estate moves, brother. So keep up the great work. But this is major. This is major, guys. And you're about to see ADUs are about to explode because folks need more housing. And a lot of the, there's no more land being made, right? And especially in markets like California and others, they're starting to lighten up the restrictions on your ability to build out these ADUs. Allowing, you don't need as much land as you once needed before to be able to get the ADU through. Now, of course, the cost of construction has gone up. You have a lot of variables there. But when it comes to, rolling, your existing investments and assets, using them, leveraging them as collateral into your next ones and kind of getting that real estate portfolio going, this is big, big news for those of you that have considered doing ADUs, maybe already have some. This is fantastic news. Now you combine this with the fact that Fannie Mae is dropping the down payment requirements for some small multifamily investments to 5%. Now this person, Dave, here on Twitter, says, I anticipate a price downturn more than 5%. This policy change will help inexperienced new landlords take on much larger debt loads on highly leveraged assets. So clearly, Dave thinks that this is going to be a trap, right? And we got to be careful with leverage, don't we? And absolutely, we got to know that our cash flow is going to cover the debt service. All while the Fed is all in to crush inflation and houses are historically way overpriced when looking at affordability, this does not seem like the right thing to do, right time to do this. And absolutely, I mean, and this is one of those scenarios, another one of the variables that we add to this equation when we ask ourselves, are prices ever going to come back down? And when you see stuff like this, it's like, well, how are prices going to come back down? The rates got raised once again, but now they've dropped the down payment requirements from, and if you look at this, currently, you're at 75 and 85. So 15 to 25% down payment is what you were having to do before. And this is on 1 to 4 units. Okay. And the adjustment actually is on 2 to 4, I should say. So on duplexes, triplexes, and fourplexes, now instead of having to put down 15% on your duplex, you only need to put down 5. Instead of having to put down 25% on your triplex or fourplex, you're only having to put down 5. And this goes into effect It looks like it's going to be going into effect in November, after November 18th. What happens when housing prices drop? The new landlords face vacancies, possible drops in rent, increases in insurance, etc. I'm also not seeing how this helps support more affordable housing as stated. It will expand access to credit, but is this the right time for that? The only way that I think that this actually helps affordable housing is it's going to make it easier for folks to build new, small multifamily housings, duplex, triplex, fourplex. Now, this is a great way. When you talk about ADUs and house hacking, a great way to house hack is to do a 2 to 4 unit. You can still do a traditional FHA, Fannie Freddie loan. And now you don't even have to put down 20%, right? You can put down 5%. And, if you have another property with an ADU, now that ADU can help you qualify that rental income towards qualifying for that new property. But you guys let me know. Do you think that this is a two-edged sword, this leverage? Because the right person who understands good debt, buying good properties, making sure that the cash flow is going to cover debt service, making sure that they make room for vacancies, room for improvements, they're going to be able to capitalize on this and use this, good leverage to get more good assets, to lock in more good fixed rate debt, right? And by being in at a 5% down payment versus 20%, that really moves the cash flow on your debt, right? Because your cash in is, 15% less than what it was before. Or in the case of the 3 to 4 units, 20% less, right? You were having to put down 25% on a triplex or fourplex. Now we're at 5%. But this is a double-edged sword. And what we're finding ourselves in right now, folks, is a real estate reset that is well underway. Foreclosure filings, including default notices, scheduled auctions, and bank repossessions, jumped 28% in the third quarter from the prior quarter. Now, this is bringing foreclosures back to their highest level since the start of the pandemic, as the financial aftermath takes a toll on the buyers. But we are not back to pre-pandemic levels. And, my worry is that we won't get back to pre-pandemic levels unless we really do get that recession. Now, that's going to be a fatal mistake, I think, for a lot of people, is that in all of their assumptions, they're assuming that we're not going to enter a recession. I believe that we're already in one. They're papering over it with fake data. But I believe that we do enter a technical recession next year. And that's going to coincide with the Fed potentially cutting rates. And what we see historically is the market's correcting and actually going down after the rate cuts. And so watch out for that. And this could be the final nail in the coffin to our economy, where folks are actually forced to sell. Because in today's market, they're not going to be forced to sell. They're locked in at 3 and 4% mortgage rates. A lot of them have plenty of equity. A lot of folks still have good, decent jobs. Even if they're having to get a second or a third job to pay the bills, they're still getting by just fine. And they're not being forced to sell just yet. But we are starting to see it tick up. And so my warning right now to you guys would be, look to take advantage of this winter's deals. Right now, market's already starting to cool off, and you're starting to see an influx of listings, this kind of final fall selling season where there's always a traditional uptick in listings. And these are folks that are desperate to sell, right? If you're willing to list your property in October, November, December, that's because you need to move, right? And so take advantage of that. Right now, you can still go to negotiate with new home construction. Go beat up those builders, okay? Those builders are desperate. Go beat them up. Not literally, but go beat them up when it comes to negotiations. Some of them in, Lennar in Colorado is offering 4.65% fixed rate for the lifetime of your loan, rate buy downs. So instead of having to pay 7.5%, 8% mortgage, the builders are so desperate that they're doing rate buy downs for the lifetime of the loan for you. So go beat up these builders, go get them locked in at a 4.65%, and go beat them up on the price, and maybe go get some other incentives too. Go beat them up. So go beat up the builders, and on these other folks that are listing right now, these are going to be folks that are going to be willing to negotiate a little bit. In my market, I'm seeing a lot of folks, they're throwing out numbers, seeing what sticks against the wall, nothing sticking. And I'm seeing huge price reductions in my market. My market is actually down year over year. And so, this is a location by location basis. Not all markets are going to be treated equal. Some of these markets are going to be seeing way more foreclosure filings. Obviously, plenty of opportunities there. And as they make these lending standards, eased up for you, be a smart investor, be wise, and be responsible with leverage. It's just like we talked about with the trading, right? Leverage can kill you. And once again, for the wrong person, they should not be putting down only 5% on an investment property. And, for the right person, they should really consider becoming a landlord, becoming a real estate investor. And maybe they should just partner up with somebody who's going to bring them real estate deals. And so just know who you are, know what role you can play as a real estate investor. I know it's a sexy thing. Everybody wants to do it. We're coming back down to reality for a real estate market that's been, blown up to a level that we've never seen before. I think that we actually could see, because of the Fed pivot and the moves next year and the lack of available supply, we actually could see prices go back up next year like some market analysts are predicting. So we'll have to watch out for that. And that's why I'm saying this winter, you might be able to go in and buy some lows while the market's getting beat up through this winter. But the problem is, folks, until we see more demand coming on, more supply coming online, there's still just too much pent up demand. There's still too many people that are, looking to make a move. Too many first-time homebuyers on the sidelines with good jobs, with cash on the sidelines, but they just don't want to sign on to 8%. When the Fed pivots next year and then the mortgage rates go back down to 7-6%, there's going to be a lot of people that are swooping. They're not going to be waiting for rates to come back down to 4 and 3%. They're just going to be happy that they're back down, from 7 or 8, and they're going to be happy to sign on to 6 and 5. So that's what I'm saying. If you can make a deal work today, then it'll only get better when those rates drop again. So, but don't bank on rates dropping. This is where a lot of people are going to get in trouble. Is they're going to bank on rates dropping, and they're going to get into a property that's not going to cover that debt service through the recession, through vacancies, and they're going to get caught holding the bag. So don't let that be you. Make sure you guys tune in here by subscribing, hitting that notification bell. I got a lot more real estate content coming on the way, and I'm going to be bringing you guys along with me as I'm set to, begin investing in the real estate asset class myself. So excited to bring you guys with me on that journey. Let me know in the comments down below what moves you guys are making in the real estate asset class, and I will see you guys in the next one. I appreciate all of you guys. Let's smash it on the way out. Everything else can be found on my website, ZachRector.com. God bless.